Now in segment 3, we're going to turn to the international market. There's a lot of moving pieces in the crude and products world. Especially when you consider that the U.S. is obviously a big part of it, but still a piece of a bigger entity. And that's why a lot of these things can clash in terms of what is happening in Asia versus the Middle East versus Europe versus Africa versus the U.S. So this is where we're going to try to put all those pieces together and fit the U.S. into it at the beginning. So with that being said, when we turn to U.S. exports, gasoline was down 449,000 barrels a day, right along the 5-year average. I don't see this changing too much. We had some support from Mexico that is going to ebb and flow. So gasoline, I think, is, again, kind of this steady state, nothing where we're going to move up and down slightly. The one that's going to continue to be under pressure is going to be distillate, which had a small increase of 48,000 barrels a day. As more India, Asian distillate makes its way into the market, that's going to displace even more U.S. product, which, again, is going to be an underlying problem for U.S. exports. So that's where we start looking at, okay, well, let's turn to U.S. tanks. And you look at storage, this is where we keep talking about the rate of change in storage. It'll continue to see draws just at a much smaller, lower level. And the rate of change will just be reduced because exports will be minimal. Demand will stay fairly stable. If not really, stable is going to be obviously at an elevated level as we described in segment 2. But when we look at production still will remain fairly diminished. And when we look at European diesel cracks, European diesel cracks are at a 2-month high, which again is why we're seeing these imports coming from Asia, coming from India, and just coming, for the most part, into Europe, because it's just the arb is wide open. So that's going to continue. Then when we look at propane declined 204,000 barrels a day. It's still 81,000 over the 5-year. Again, this is going to be that timing move. We expect to see that increase, but you have to make room for boats because there's only so much space in the Houston Ship Channel and other channels along the U.S. Some of them are 2-way traffic. Some of them is only 1-way traffic. So that's why you get these delay points. So when you get the increase in crude exports of 1.581 million barrels a day to come in at 4.122 million barrels a day of exports, you're going to have some congestion, which is going to leave stuff in there. And again, there's some of this is paperwork as to when it was filed. Some of this is just, again, that end of month push. So we expect this to come down. You'll still see some residuals. So we still think we're going to be at about 3.3 million, which is going to be above what we think is kind of that steady state of 2.6, 2.7, really 2.6 to 2.8 is kind of where we think we live. So when you average it out, that's where we are, even with this gigantic number. But again, this is going to pull back. So you're going to have this week you have imports increasing, you have exports declining, but again, they're not crashing. It's just they're going to decline. So that's going to adjust some of these movements in storage. So and just to reiterate, European arrivals of clean products from East Asia are set to stay at 0 for the 3rd consecutive month in April, which they did. But now we're actually seeing a big acceleration in May. And now we're at a 13-month high in May coming from India, other parts of East Asia flowing through. So we've actually seen a huge pivot, which is going to, but there is a timing delay. It still takes time to go from point A to point B. So, but again, that's going to start to feed into Europe, and that'll keep U.S. exports under pressure. So then when we look at just gasoline exports, as we were saying, we thought we were going to kind of follow this average. We think that's going to remain the case. We'll continue to follow the average, which just means that we'll see a little bit of a decline. We think we get a little bit of a flat line here, but the trend is just going to be more seasonally normal, because if you think about COVID, you think about the issues in Latin America, there's really no demand surge. So it's just going to be, okay, well, I'm looking at fairly strong margins in the U.S., fairly weak margins abroad, so why am I going to export? So that's why I think these are going to stay along that average. Then when you look at distillate, one of the things that we were saying is we're just going to live in this level of the bottom of the cloud. I don't see that changing. If anything, it's going to push much closer to the bottom of the cloud, especially as we continue to see cargoes show up from Asia, from the Middle East, from the Middle East, and as they come into the market in general. So then when we look at crude exports, you can see the nice little surge that we had. But when you look at every time we have that big surge, we have I don't want to say an equal, but sometimes it's an equal or greater than decline. And at this point, it won't be an equal decline, based on what we're seeing. It's going to be kind of, essentially right in line where it's going to, let's say, cut half to come down to about between 3 and 3.2, 3.3 million. So it'll still be at the top of the cloud, but again, you're going to get that big shift down, and then it'll continue to go further down to come into what we think is going to be the average of that, 2.6 to 2.8 million barrels a day at that middle of the range. Then when we look at propane, we were expecting a little bit of an increase closer to the top of the cloud. Instead, we came down a bit, still remaining over that 5-year average. So when we look, we still think we're going to hold towards the top of that level. The one thing that we're going to have to look for, as Saudi Arabia increases production, as the Middle East increases production, we're going to have to look at, okay, well, what is happening in general? Let's look at what is going on. And then that's when we shift and we look at, okay, well, Saudi cut pricing, they're increasing production, which is going to naturally increase NGLs. But, just based on the demand in the market, it'll take some market share, but not a lot. So I think we'll just keep pretty close to the top of that cloud for the most part. When we turn to Europe, we had a small increase of about 500,000 barrels. You can see we're still trending at the top of that range, going back over the last 6 years or so. 7 years or so. So again, just based on what we're seeing on the demand side, this is one where we think we're just going to continue to kind of push higher and see an unseasonally increase. But when you look at the increases, it's normally on that average, you typically see increases through July. So we're just going to follow that trend just at a bit of an elevated path based on what we're seeing. Obviously, we have a fairly large turnaround for pipes in end of May to June, and that's something that will impact it, but it's not going to be anything too crazy in general. Now, when we look at India, as we said in the segment 1, here you can see that the imports of crude over the last 5 years were essentially at a low for where we are this time of year. Obviously, you can see where 2020 was and that huge drop. Just based on the COVID cases, what is happening there, we expect to see this continue, and we've already seen it because this is for March. We know what happened in April, and then April things got worse to continue in May. So again, this is going to continue to the downside when we look at just what is happening in general and what the pressure is going to be. So when we turn to, okay, well, let's look at exports. Well, in March, diesel exports were at an all-time high and even outpacing 2020. And just based on the decline of activity, and as refiners were already sitting on a significant amount of oil and refined product in storage, we're getting more product getting pushed into the market. So we think that you're going to continue to see this make highs even above 2020, which again is going to put more product into the Atlantic Basin. It's going to put more product into Africa, which is going to displace. So just think of it logistically. So you go from India product gets pushed into Europe, into Africa. So the Middle East can't really go as much into Africa. So then more goes into Europe. So Europe becomes kind of this dumping ground as guys get pushed back, because the Middle East typically takes that area, also sends into Europe. So this is going to see a bigger shift, especially because we are seeing more exports from China. So you're seeing kind of this knock-on effect where China exports more, so India can't export into the region. So India has to turn outward. India turns outward, and you can see that knock-on. Now, gasoline, it's still, gasoline was still the more, we actually saw some decent growth and recovery in March. So there just was less to export. This is the one that's going to see the steepest decline. in demand. So we think this is going to see the biggest increase in exports as a percentage. Diesel will still be the biggest on an absolute number, but percentage wise, we think this gasoline is going to get pushed into the market, which is going to find its way into the Atlantic Basin, find its way into the U.S. and other markets, just because, again, it's just going to keep pressure on our export market, again, shifting those supply chains. So then when we look at OPEC production, so OPEC production was the net change. We saw a 50,000 barrel a day decline in April, which it was all caused by Libya. So Libya declined 80,000 barrels. That has since stopped. So the NOC was delivered about 305 million dinar. That is going to that'll stop, again, the force majeures. We're seeing some of that normalize. So Libya is on the up. And then, as we know, as we come into May, which is now, the numbers go higher because of the deals, the OPEC deal. So crude oil production in general, Urals traded, and this is where we start to get some concerns on the market. So Urals traded in Northwest Europe at the lowest in a year as we got into late April, which persists so far into the beginning of May. But that has also helped some margins on Urals, but we'll talk about that in a minute. This is where we're starting to see some of these pressures, where we have Angola cutting pricing, we have Nigeria cutting pricing, we actually have Saudi Arabia cutting pricing a bit into both Europe and Asia, increasing it into the US, but cutting it into Europe and Asia. And the problem is, even though they're cutting it into Europe, they're going to struggle to compete against OPEC, against Russia, as well as Libya. But this is just where there's a lot of crude out there, and there's a lot of it on the water, rising in storage in some of these other key areas. And when we think about key areas, let's look at Russia. So let's focus on this one specifically. So shipments to China fell to their lowest since at least January of 2019. So when you think about China is not buying the amount that would be expected. And you can think about, why is this happening? Well, you have Iran that we know is exporting more, but you're seeing a shift in general. Right now we've seen Shandong not buy as much from Norway, Latin America, specifically Brazil, and now not from the Russia. So when you think about Urals and Iran, they're fairly close. So this is the replacement value, but then. So you're seeing Iranian crude get blended with Angolan crude and some of these other metrics, which again are displacing some of these others. So even though Iran is not included in anybody's numbers, especially the spare capacity numbers, that's where we're starting to see some of this friction. So flows to China fell to 361,000 barrels a day, their lowest level since at least January 2019. Shipments to the U.S. reached their highest level, so we're importing a lot of Russian crude, even though we claim to not be friends, rising to 90,000 barrels a day in April from 56,000 in March. And deliveries to South Korea rose to their highest in 11 months, reaching 256,000 barrels. So China is taking way less, and you can see the trend. The trend has been down since the beginning of 2021. So this January of 2021, they took the most amount of Urals since essentially November, was that September and October, into October. And now it's been a steady decline because this is why we keep talking about Chinese demand. Indian demand just isn't there right now, and it continues to get a bit worse. Now, others obviously into other nations, because the Urals exports are at 13-month highs, even though pricing is at 12-month lows, and that's what the friction points that we continue to see as to where is this spare cargo going to go. Now, looking at just the numbers in general, so to Asia, we actually have, when we look at the Asian moves, and you put it on a seasonal chart, it's actually very low versus the seasonal norm. So we're seeing some of those discounts, 20 cents off Superlight, 10 cents off others. So the expectation was for a 20-cent cut. So here you can see it's either down 10 to 30 cents, so kind of right in line. And then to the Mediterranean, we saw a fairly sizable cut in general, just in terms of what was coming into Saudi Arabia, into the Mediterranean, and into Europe. You can see that the cut was fairly large for June. And June is typically when you see an increase, because again, we kind of normally see some of these increases. You're coming into summer driving, things are moving around, but you're starting to see a little bit of a rollback, and it's the first cut since December. And not for Europe, because they've been trying to compete more and more against Libya and Russia, but it's the first cut into Asia since December. So then when we look at preliminary fuel sales, so when we look at April, here you can see kind of where things sit versus normal of 2019. We're still almost 10% below normal in diesel, 4% below gasoline. Obviously, propane remains strong. And then when we look at the month over month, this is the trend that we keep talking about, where the rate of change is on a percentage level is going to be more aggressive in gasoline because it has further to fall because it recovered more. So the month over month was down 6.3% in gasoline, 1.7% in diesel. Those trends will remain negative and continue to weaken overall. So now let's look at some of the commentary that's been said. So oil shipments loaded for India's public sector refiners hit a 7-month low of 1.7 million barrels a day, according to Vortexa. Indian clean product exports, including naphtha, gasoline, diesel, and jet fuel, seen at 1 million barrels a day in the first week of May, on par with levels in January and February. Product exports from India did not see an uptick in April, according to Vortexa data, partly due to inventory restocking after exports hit an 11-month high in March. So that's going to be, we're seeing pretty much a steady move from March and April as there's no real uptick. But when you look at the numbers in general, that's still elevated for diesel, fairly normal for gasoline. But then the acceleration comes in May as we're going to have these, as COVID continues to be an issue. So a rise in exports may be imminent if domestic demand falls further, which it has, and refiners have only started to pull back production, which we think accelerates. So fuel sales in India could have been worse in April, but for the elections in some states, that helped spur demand. So April had some of that surge, and people are claiming that the elections, again, claiming, who knows, if this was the case, rallies, parties, things like that. So for the campaigns, that is said as the reason for the spread, or the extent of the spread. So again, those things will get a bit worse in general. So when we think about just the general impact overall, looking at it holistically, you can see the country's oil imports may decline by more than 1 million barrels a day to reach 3.1 million barrels in the coming weeks. So far, we have the oil imports declining 1.3. That was our numbers. That's what we're seeing. And so far, that seems to be consistent and increasing closer to what market expectations are. So when we look at where China's getting less crude from, because I think this is an important side, when you look at January overall, you can see a pretty steady decline across the board, and if you think about just the GCC, Brazil's the one that is losing out to Brazilian, and Urals are losing out to Iran. But why are we seeing that decline in Saudi and Kuwait? What is the biggest reason? And it comes down to not only just price, but they're trying to play this game, which is why we keep talking about Chinese demand, because it's just not where I think the market expects it. It's showing up in the data. It's obviously the U.S. numbers have been on the bullish side, which is again skewing some of this. But this is, I think, one of the bigger issues in general. And then Accenture did a survey of 400 North American financial services executives, found that almost 80% prefer that workers spend 4 to 5 days in the office when the pandemic is over. Many employees, and they don't have it, but the numbers that we've seen are about 75% want to hang on to flexible schedules. So this is going to be some of that friction point, just an interesting anecdotal piece and survey that we saw. Now turning to loading factors. So let's look at crude abroad. So here you can see Libya is starting to increase for May, getting back to those numbers. We think, as we were saying, we're going to get close to where we were at about 1.1 or so. So a little bit more of an increase in general. When you shift into Russia, Angola, we're seeing some of those shift over in general. And the reason why is Russian ESPO crude loadings rose to a 13-month high, with the grade trading at a premium of 210 to 240 to the Dubai benchmark, which is up a bit. So that's so far ESPO has been okay. The number now they haven't crossed, but the numbers that we see on the spread are a bit lower. So we're going to see where that sits. ESPO in the so let's see this is coming from Energy Aspects. We understand that teapots are blending ESPO with Venezuelan bitumen in Iranian grades, which explains the drop in appetite for typical teapot favorite grades, Lula and Johan, which Lula being Brazil, Johan being Norway, which we've explained earlier. So Russian increased its oil output month on month in April to 10.46 million. April condensate output. If April condensate output is in line with March, then daily crude oil crude only output would be about 180,000 barrels a day above their quota. All at the same time, Urals traded at the lowest and in April at $2.80, which continue. And then when we look at April tracking in general, flows of Urals crude to Asia resumed in April, and then they continue to still move in May, but at a very reduced rate. And those are things that we're going to continue to see as Norway comes back. As we said earlier, when we look at the UK sees that big drop because of additional maintenance that will come back in July. And again, that's been very well telegraphed as Congo has increased their flows. The problem is right now Nigeria has yet to clear along a normal rate, more being displaced. You have Congo again increasing rates, not selling. These are the issues where Angola so far kind of has a fairly steady move as we see additional appetite going into a fairly steady appetite of Angola and going into China right now, but not for the others, which again speaks to just some of that slowing demand, which we'll talk about when we look at refinery throughput. Now, some of the things that we kind of expected to happen are starting to happen in Fujairah. Light distillate, middle distillate was up. So just in general, so Fujairah reported an increase, a third weekly build, which was driven by light distillates, middle distillates, with a small draw in heavy resid to over 24 million barrels. This is the first time they have stood above 24 since mid-December. Total stocks rose 765,000 barrels, which is about 3.3% a week on week. Light distillate was a build of 69,000 barrels, up 1.3%. And the east of Suez gasoline market was kind of finding that support that we were talking about, but then the issues that we see coming from Asia and again Middle East displacements that we talked about and highlighted is going to essentially show up here. So we expect to continue to see a little bit of an increase in light distillates. Middle distillates rose 917,000 barrels to 3.862 million, up 31.1% on the week, which is the highest level they have been since the start of March. The gas oil market remained range-bound with weaker demand and regional demand. And then fundamentally, when you look at the Asian gas oil market, it's very weak. India and Japan both have their COVID outbreaks. They've both expanded their emergency situations, which is going to be a problem for middle distillate, which we continue to highlight. And then stocks of heavy resid fell 221,000 barrels, which is a drop of 1.5%. With bunker activity essentially fairly muted, which speaks to some of the slowdown that we've seen in shipping. But the slowdown is less because there's not as much to move. It's just there's not as much assets to move it with. So again, that's kind of those issues. Now, when we look at crude oil on water, you see that big step up. We think this is going to continue to move up. Just based on, again, those slowing demand numbers that we continue to see out of Asia, which is going to leave more stuff on the water. Transit bounced. This is going to continue to move up, but at a fairly muted pace. We think it's going to flatline a bit, get closer to where we were in just above those March levels, just because we did have more shipments move, especially from the different areas of Africa, but it's just going to be some of those slower shifts. While when we look at crude oil in floating storage, you can just see that we're elevated. Obviously, 2020 was 2020, but we're still at the top of the range as we go forward when you're trying to think of, okay, well, what is normal? How does normalcy look? So the amount of crude oil held around the world on tankers that have been stationary for at least 7 days rose to 105.95 million barrels. which it's, as we keep saying, continues to trend higher. So then when we look at just what does the products market look like, here you can see we had an increase across the board in Europe. This is the one when we look at gas oil. This is where we continue to see the imports. We have cracks going higher. Imports will increase. This is going to trend closer to the 15-year average, which obviously is still below the five-year average in general. The bigger issue overall was the continuous increase in gasoline storage. As you can see, we're right at that 5-year, the top of that was at that 7-year high. So again, this is going to be, almost 10-year high. So that's where typically we see declines here. And that's why we keep saying that we don't see the declines. We think it's just going to go sideways at this point and remain elevated through the next few weeks. This is the one that concerns us the most when we look at fuel oil, especially around the world. This is going to find its way into a cracker, just because it could be and may be cheaper than the feedstock oil. They're trying to protect margins, so they're going to start to run this, and it also will allow them to make additional space in storage if they're able to run this at a higher rate. Then when we look into Singapore, so as we said before, Singapore had a bit of a draw. When you look at what caused that draw, the middle distillate side was a small draw, resid was a small draw, but light distillate had that nice drop. So now when we think about the future, here's where we think that fuel stocks are going to remain elevated as an aggregate, but not really trend up or down, just again, that sideways move, as we do have more leaving storage, but we have it being replaced with the displaced Asian cargoes. When we look at middle distillate here, you can see that we kind of have that normal decline, and then we start to see a little bit of an increase. So we think right now the middle distillate side is going to shift higher, especially when we look at Chinese and Indian exports remaining elevated, which is going to find its way into the storage markets. This was the one that had the biggest drop, and not to say that it's going to see an equal rise, but we think that over the next 3 weeks, we're going to have a steady increase, because all of these shipments are what left for other markets, specifically the Atlantic Basin and PADD 5, when we consider the demand levels where the margins just make sense to go from these levels into U.S. and European markets. The time spread, you would expect June, July to be a bit more elevated. Instead, it's kind of flatlined here. So this gives a little bit of a pause when we think about time spreads. But then when we look at the time spread, WTI and Brent, December to December, you can see that strength that continues to move back into the system. So you have to look at the short-term, long-term to see, okay, well, what are time spreads doing? What makes a bit more sense? Because you can see as things softened a bit, that was when we saw some of that pullback in crude pricing. So we just want to be sensitive to some of those shifts, especially as we see margins starting to roll over again, especially in Singapore. Again, speaking to the pressure that we continue to see. So when we look at this, we continue to see pressure in runs in margin, which is just going to put more in storage, which is, again, shifting some of these moves around when we're thinking about, okay, well, what happens next for crude cargoes? The hydrocracking side still remains fairly strong in comparison to everything else. So you're still going to see that hydrocracking side be fairly elevated, which speaks to the middle distillate getting some more builds versus some of that light distillate. So the light distillate will get filled by some of that excess barrels coming out of Asia that don't make it into the U.S. and European markets right away. But it's still below that 5-year. And then when we shift to Urals margin, we've had a little bit of a rollover, but still remaining strong, which is why even though they're coming down, you're seeing Ural pricing come down, and this is going to be something that is going to give Putin and some others pause, which we'll talk about in the Econ show, as that kind of weighs a bit. Even though Brent prices are showing obviously elevated levels, they're not realizing it, and that's going to become that friction point that we keep highlighting. And now when we look at Mediterranean Urals, here you can see there's everything has rolled over a bit. When we look at hydrocracking, still remains the strongest. So that's going to be the one to watch in general as we go through, speaking to the gas oil and fuel oil markets and how that middle distillate cut is going to look over the next few weeks. Then when we look at China tankers, here you can see we have a small decline, but again, within that 5-year average. We expect to see some of this reverse higher, but still be at a fairly muted level. And then when we look at run rates, this is the one that we want to touch on for a moment. So when you look at the state-owned refiners, so the state-owned refiners have come down a bit. We expect to see that start to come back as we come into May because we did have some maintenance. But when we look at the Shandong and the independents, you can see that they're down to 66.5%. Now, there is maintenance included in that. It's just the investigations is going to limit the amount of activity coming back. And that's where we remain concerned on what is total Chinese demand look like. There's going to be holiday slowdowns in here because you had the May holiday. So you come down and then we'll see some of this come back, especially as maintenance season ends. But the teapots is the one that we don't think comes back to the same level because they want to make room for state-run guys just because the market isn't as strong as I think obviously the crude futures market expects. Then when we look at Asian floating storage, you can see that increase. We believe that increase continues to accelerate due to obviously India and the other spread of COVID within the other Southeast Asian nations. North Sea had a big shift down. This is one that it'll remain below the 5-year average. We were expecting it to kind of marry that 5-year average up. We just think it'll start to pivot up. It just won't marry with that 5-year. It'll just be at a reduced level, but still have those that growth point. This is the one that we keep talking about because West Africa, as we were expecting, had that big spike. We think the spike continues. We're not seeing a lot of movement. We're seeing some price discounts come through just to try to get some of these barrels out of the market, and we're just not seeing it. So we think that this is going to continue to push higher, specifically in West Africa. The Middle East is the other one. We try to separate out because you look at 2016, obviously from when OPEC, the deal died. But the trend remains up when we look at just in general. So, and against 2020, it's above the 2020 numbers, and we think this is going to keep shifting up. And you're going to see this trend higher and take out the high from March, just when we start looking at, Saudi's starting to put in some discounts. They're starting to try to get a bit more aggressive because they see some of these builds happening in the floating market. Europe, on the other hand, had a pretty sizable drop. This is one that we were expecting to come closer with the 5-year average. Instead, it dropped to a new low. Again, this is one that we think is just going to pivot up with Norway, but at a fairly muted pace, just because you do have some of the bids came across stronger. This is fairly supportive when you think about dated Brent. And the maintenance season is going to eat into that, which is extending through not just May, but also June is kind of that peak. So that will keep some of that floating storage fairly muted in general. But then when we look at Shandong stocks, here's where we think, just based on the run cuts that we're seeing and the preemptive purchasing, we're going to have these continue to go back up, and we think it'll take out that 2021 high within the next 2 weeks. And the thing that continues to get worrisome is when we look at fuel oil. So speaking of fuel oil being run as a feedstock, the storage is back above the is at a 2021 high. When you look at it against 2017 as well as 2015, 2014, it's been higher. It's just this is something that's going to get a bit worse, and it just shows you how high it can get. And as we see more fuel oil being cracked, as blending continues, that's going to essentially leave more oil in storage, which is going to be some of those friction points that we talk about specifically in Asia. So I know we covered a lot. If you have any questions, we'd love to hear from you. I know this ends up being a bit of a longer section. Obviously we talked a lot about OPEC, which came out later in the day. So I always talk about this kind of stuff on LinkedIn not Facebook, Twitter as well, if you want to hear more, or you can obviously contact us through the comment section in YouTube. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.